Hello guys, it's Max here from Daily Market Movements and welcome to another episode where today we're going to be analysing the NASDAQ 100. Just before I start today's video, for those who are wanting to join my signal service, please don't hesitate to visit my website dailymarketmovements.com. That will bring you to this website here where I charge a very small fee of $29.99. But back to the NASDAQ 100. The NASDAQ 100 has had a rather volatile day. We did initially fall down at roughly 1%. We did actually go and touch the 200-day EMA. Now, this is something I'd been saying the whole week. And I did take action. I myself and my signal team bought at 14,730, which are the swing lows. As you can see, the low of the day was 14,728. So we pretty much cherry picked the bottom here for the NASDAQ 100. You can go back and watch my videos that I posted, yesterday, Wednesday, Tuesday, and on Monday, where I said I'm going to be waiting for that move down towards the 200-day EMA, and then this is going to be the area where I'm going to want to buy and retarget around 15,300, which were the weekly highs here for the NASDAQ 100. But there was a big development during the trading session today. You may have seen it on the news, you may have not, but I'm just going to bring it up quickly here. And that is with regards to the 10-year and the 2-year Treasury yields. So for those who don't know, these are the government bonds. And something very negative happened during today's trading session, and that is that the 10 to 2-year spread, so this is a comparison of the 10-year bond and the 2-year bond together, actually entered into negative territory. So if I just bring that chart up, actually, this is the spread. We did dip down. As you can see, we've had a huge fall from the 1st of March, down around 100% here for the spread. And unfortunately, as I just mentioned, we have entered into negative territory. Now, what does that mean? Well, typically speaking, it is a very good indicator to predict a recession, and I found this graph here that I think that you will all be interested in. And if we see where the 0% mark is, so that's this area here, every time we have dipped below zero, we've been met by a recession shortly afterwards. So for example, here in 1990, I think we dipped below it back in around 1988, and it was followed by a recession, which is this grey area here in 1991. Then of course we had the dot-com bust, where we had the 2 to 10-year yield dip below that zero mark, and of course it was followed by another recession. And then of course we had the 2008 and 2009 financial crisis, and then we had COVID, which was the shortest recession on record. I think it was about 30 days. And of course now, again, we've had that 10 and 2-year yields dip below. So you're probably thinking, oh my God, run for the hills. The market's going to crash once again, just like we did back in 2020 when COVID first hit, and we had the shortest recession on record, which sent the stock market still down 31%. And the answer is, don't panic just yet, because typically speaking, when the 10 to 2-year yield dips below zero, yes, it does typically predict a recession, but that could come anywhere between 6 months to 33 months time. So we could be still trading this time in 2 years time, and the markets could be hugely positive from where we are currently finding trading right now. That being said, we could even still go and achieve a brand new all-time high, or in theory we could even rally 20% higher from current levels now. So I wouldn't panic just yet. It's definitely something to have in the back of your minds though, as we do go into 2023 and especially 2024. But short term for the NASDAQ 100, I'm incredibly bullish here. I think the 250-day EMA will offer plenty of support. I think shortly we will be met with a 50-day EMA piercing above the 200-day EMA, forming that bullish crossover. Technically, that is a buy signal. And I think that as we go into the latter end and the middle of 2023, we will start to see the NASDAQ 100 go and challenge those all-time highs, which currently sit up at around 16,600. Also want to mention that going into next week is a very important week, because we have the beginning of earnings season. And it's going to be really interesting to see what the CEOs of some of these top high quality companies. Of course, next week we kick it off with the banks. But as we go a few weeks into the earnings season, we'll have the likes of Apple, Microsoft, Google, Amazon, Nvidia, AMD, you name it. But it'll be very interesting to hear what these CEOs have to say about the outlook going into Q3 and especially Q4, whether inflation will really hit their profit lines. So big week next week. Go and recharge your batteries. It's the weekend. Don't forget to go and check out my signal service page over on dailymarketmovements.com. I've just posted a buy signal out for the NASDAQ 100. It's the weekend. It's still not too late to get involved in that trading signal on Monday.